Hi traders, I'm Ross Maxwell and welcome to the latest edition of the Keyzone Traders Trade of the Week. Today we're going to look at a reversal that we took on the DAX. It was part of a day trading setup that we look at, and we also tied it in with a zone that we issued through our Keyzone service, which at the moment you can find on our Twitter channel as a preview to the subscription service that will be going live in the next month or so. So please, with that being said, let's take a look at the charts. Right traders, so let's look at the reversal that we took today in the DAX. So again, as I say, this was a day trading strategy. So we was looking at this on the 3-minute chart. Now on our Twitter account this morning, as I mentioned, we issue what will become part of our Keyzone service subscription service. And here we provide a template and framework of zones that are of relevance in the DAX today in terms of support and resistance, and we said that DAX is in a range between 15615 to 630 and 15775 to 15790. So that meant that this was the top of the range and therefore resistance, and likewise this was the bottom of the range and likely to be support. So with that being said, we have our zones plotted on our charts. This is the Pro Real-Time charts. This is the charts linked to our IG accounts. And this happened just after the open, so the market moved up and just hit the top of this resistance, and as we can quite often see, just made a slightly higher high and then started to reject the zone. Now the reason that we like it, again, we don't just look at one time frame. We have the pattern here. We then look to the higher time frame for higher time frame context. So with that, with the 3-minute chart, we look at the 1 hour chart. So we was looking at the 1 hour chart here, and as you can see, when price got up to this point, let me delete that so it's clearer. We can see here, this spike up here was that move up. We'd just taken out the previous swing highs. The market was very extended on that 1 hour chart, and this impulsive move down, and it was at the top of the range, the corrective structure here. So although we was above the 20 EMA, like which potentially shows some upside, we were very extended away from it, and therefore we're looking to trade this back as a mean reversion back to the 20 EMAs as well. So it had the higher time frame context in terms of it being at the top of the range and extended, and we had the lower time frame pattern as well to support the trade. So entry on the trade was at 15.7, I believe it was at 15.72. Let me just double check. The low was 15.773, spot 8. So yeah, we issued a sell, or we put in a sell order at 15.772, and our stop was 23 points just above this at 15.795. And for this one, because we'd had quite a bullish open, we'd had 3 very strong buy candles, we were just looking to take our profits back down here at 15.749 for a 1-to-1 target. Just in case, I can't quite get it, that'll do. Just in case we came back to the moving averages and then wanted to put in a continuation move. So, and it was just towards the top of this next zone of interest for us as well. So those were the parameters of the trade. It's obviously worked. It worked quite nicely, and if you'd held the trade, it was actually the high of the day, and it's reversed incredibly well. But that wasn't our target. That wasn't the aim of this trade, and unfortunately, for full transparency, we actually overmanaged this trade a little bit, and we got out at break even. So we didn't actually even profit from this trade. And the reason, I just want to show you the reason as to why we didn't profit from this trade and our thought process at the time that we went through in a live environment. So obviously, as I say, we'd had this quite strong impulsive start at the open, and when you get this, you just want to be careful of any continuation moves, which is why we was only going for the 1-to-1 target. And on the 1-minute chart, we actually, if I show you, if we scroll back to the point here. So we was into the trade here, and we got this really strong 1 minute candle that pushed all the way up. And what we actually did was, because we was aware of this strong move, we actually took our half profits around 15,760, which meant that we reduced our risk and we moved our stop. Because we're locked in 12 points of profit, we moved our stop down to 15,784 to make the trade risk free. And what it's actually ended up doing is literally just coming and clipping our stop before going on and hitting our target. So this was a frustrating trade for us. The setup was great. The higher time frame context was brilliant. It was a textbook trade, but unfortunately, just using our risk management, which often saves us money as well. In this instance, it was a frustrating trade. We just clipped us out before going on to target. So guys, I hope you found that useful, and I will speak to you next week.